Good morning, good afternoon, good evening, wherever you are. I'm your host for today's update on ETFs, spot ETFs from the US. Yes, everyone is talking about it, and everyone is also talking about how ridiculous this statement I'm about to make is. If you're from the UK, this video is not for you. Please do not watch this video. It's meant for everyone else from the rest of the world. And from everyone from the rest of the world, please note that this information is not financial advice. If you do require financial advice, you know what to do. The information contained in this video is just good for educational as well as entertainment purposes. Yeah. Anyway, back to the subject of ETFs. Bitcoin ETFs, we've covered those in previous videos, and now there's a rumor about an Ethereum ETF. That's what we're going to cover in this video. So guys, if you are new, welcome to our channel. Please consider subscribing to our channel so we can grow our channel. From time to time, we do mix it up. We do bring different videos. Some are repeat videos or repeat subjects. Others are brand new, like the ones we post week in, week out. And we also have some public portfolios that we share with our community every week. So, as you know, everyone and their grandma has been screaming bullish in view of the pending Bitcoin ETF over in the US. Don't get me wrong, that is what has been driving much of the bullish crypto sentiment of late, and we're most likely going to see a kind of distorted cycle. Again, that is my own view, of course. And by that I mean, where many were expecting a collapse in BTC price immediately before the halving cycle event estimated to occur sometime in April next year, we may instead experience a bull cycle that also kicks off prior to the halving cycle, thereby giving us a distorted cycle according to the limited information we know since Bitcoin was launched back in 2009. I'm in no way suggesting that this time is different. All I'm highlighting here, guys, is that factors that were not part of the equation in prior cycles could be at play this time around. It's something you need to consider, at least consider, even if it's in small part. Now, back to the subject matter, Bitcoin and Ethereum spot ETFs. We have covered the Bitcoin ETF in recent videos. Check the links in the description to see what I'm talking about and what we're talking about back then. We're also very bullish in that regard. The likes of BlackRock, ARK Invest, Invesco, Wisdom Tree, Grayscale, Bitwise, Valkyrie, Global X, Franklin Templeton, Fidelity, Hashdex, and Vanek. The list goes on. The spot Bitcoin ETF field is rather crowded at this point, and the whole market is waiting in anticipation to see whether they are all going to be issued at once by Gary Gensler and team, seeing that BlackRock, one of the darlings of the status quo and legacy finance, of course, is one of the largest fund managers in the world, but he isn't technically first in line to be approved. If someone else was going to be approved before them, could there be a massive benefit and an advantage to that first mover? That's what we're going to find out in the next few weeks, maybe going into early 2024 if that doesn't happen this side of Christmas. Anyway, over the years, Bitcoin has seen its fundamental use cases shift with time, skipping from one claim to the next. At present, it is being marketed as a store of value, or digital gold, as some call it, including, you know who? The boss of BlackRock, Larry Fink. He calls it store of value, and he's actually saying it's a flight to quality. Go figure. That is all fine, because as a technology, it should be able to evolve. More on that later. Now, some of these fundamental use cases or properties for Bitcoin include store of value, as we've already highlighted, digital cash for digital payments, energy monetization, financial inclusion, anti-corruption, and some even go further in as far as saying it is a current standard that should be adopted worldwide by nation states. Who am I to argue? I think they are all valid at any point in time those arguments are put forward. While the above is not a conclusive list, it does not capture most of what Bitcoin is claimed to be by most of its vocal advocates. Let's look at some of these claimed properties closely, and where we can, justify or dismiss accordingly. Again, this is just my own opinion, so hear me out. The one thing that no one has actually questioned or proposed is that, say for argument's sake, if the current value in the world freezes with no more additional wealth generation or value created, the world starts to recycle existing wealth. Theoretically, that means there is a finite value that Bitcoin can store. That is the total value as limited by the global economic system. Currently, there is more so-called value added not created. Okay, this is something that people don't actually consider or pay attention to. The value that we see year in, year out is not created, but it's just added through inflation. There's no creation. You're not creating anything additional, just inflation being allowed. So in principle, if inflation were to disappear, then so does the total value that Bitcoin can store. Yes, we could also argue that the efficiencies introduced by the removal of the middleman could enable Bitcoin to absorb additional value within a finite economic system. As I've already said, let's say everything freezes, there is no inflation, and if the world is not creating anything, there is no value to store. So the value to be stored will be equivalent to the value that is already there, that is just being regurgitated within within the system. Now, the next property or characteristic or use case for Bitcoin is that it can be used as digital cash. Yes, we've had the Lightning Network and other technologies trying to make this happen, but with limited success. While the Bitcoin network itself at the layer 1 level isn't that scalable to handle instant payments. It's no secret, everyone knows that. Enter layer 2s for Bitcoin's layer 1, and we have endless debates on whether the gatekeepers, that is Bitcoin developers and some opinion leaders within the Bitcoin community, who do not even want to entertain that idea. We even have the layer 1s attempting to transfer messages with Bitcoin's layer 1 at a protocol level, and the inertia is never far away. No one is actually open to new ideas to make Bitcoin work the way it should work. Any system, any technology, if it doesn't evolve, it dies, right? I'm not suggesting in any way that Bitcoin is going to die, but I'm just saying in terms of technology, if something does not evolve, it just dies away. Anyway, moving on. We have also had endless debates on whether Bitcoin is environmentally friendly, and its proof of work consensus is deemed a higher user of energy. To date, there are new innovations making the Bitcoin mining process greener and using green sources of energy. Think of power deriving from volcanic activities in certain parts of the world, hydroelectric power sources from countries like Kenya and some in Latin America that is being used for mining, flare gases as is the case in certain parts of North America. The list is getting endless with each new environmentally friendly technology introduced to generate power in order to mine Bitcoin. So this argument that Bitcoin is not environmentally friendly is getting less and less strong with each day that passes. However, the one property or characteristic that is not being debated at great length is financial inclusion, which is the cornerstone of what Bitcoin was invented for, in my view. After all, Bitcoin is supposed to be a peer-to-peer form of currency. This has to make sense, or at least it should, right? However, if one can reconnect to the earlier characteristic or property of Bitcoin that we covered at the beginning of this session, store of value, an argument could be made about those from poor parts of the world who cannot afford to store any value for future use because they are thinking of today. You store value if you got value to store for future consumption. But if you are struggling to survive, this is probably not going to be the silver bullet that is made out to be by some Bitcoin maxis. Their day-to-day grind, those poor people from poor parts of the world, their day-to-day grind is all about survival, spending whatever they get to survive the day, which in some cases is not even enough. The so-called value will easily transfer to those who simply hold the Bitcoin as a store of value. Why? Because they can afford to store whatever you want to call it, value, energy, whatever it is, wealth, whatever it is, they can afford, and they will store that. And those poor people are left to suffer. They've not benefited from Bitcoin. If anything, we just created Bitcoin to transfer value from people who can least afford to store value to those who can afford to store the value. That is something to keep in mind. Let's not be blind here to other people's plight. If Bitcoin is meant to solve the financial unfairness that exists today, it's got to work for the people who can least afford to live and survive within the current financial system. I'm not criticizing it. I'm just pointing certain things that people should actually consider. Yes, Bitcoin has given those groups of people the chance to bypass a middleman, which is your legacy banking or any middleman. If it's remittances from people overseas, sending money and cash to their families, using Bitcoin makes them avoid that. They are not paying the middleman, but they are still not capturing the value since they can't afford to. In my view, this financial inclusion will only make sense as far as the poor folks can deal between themselves on a peer-to-peer basis until the value is collected by those who can afford to store the value, of course. Why? Because they can afford to. They are not fighting to survive day by day. In other words, those that can afford to store the value in Bitcoin are going to do so at the expense of the rest who are left fighting for crumbs. That is a fact. It cannot be dismissed. As far as being anti-corruption is concerned, I think Bitcoin does cut some corruption, but not all of it. We know market manipulation is still rife within the crypto space by unscrupulous players. I know people will say, yeah, but we don't have regulations. I think those who are in possession of most of the Bitcoin, you can bring all the regulations you want. One thing you won't do is bring a regulation that says you can only keep this much Bitcoin. That would be against so many laws across the globe, especially in modern democracies. You can't take people's property. I know they did that in the US with gold, but can they pass a law that says you can only keep this much Bitcoin so that you can spread it across the world to the wider public? I don't know. I don't think so. If they do that, then Bitcoin has failed. And as far as corruption is concerned, mentioned market manipulation in current crypto markets and Bitcoin markets. Does it matter whether the corruption is transparent and on-chain or it's hidden, which means it's off-chain? Corruption is corruption whether it's on-chain or off-chain. Doesn't make any sense. I know in the real world, there are certain things that are demonized elsewhere in other parts of the world, but in the Western world, there are actually regulations regulations that facilitate or allow that to happen. We're talking of corruption on a commercial scale, but it's allowed. Why? Because the regulations say so. Regulations say it's within the scope of what's allowed. But if the same thing happens elsewhere, it's bad. That's the way the world works, unfortunately. Anyway, so enter Ethereum and its reported spot ETF application by the likes of BlackRock, ARK Invest, and so many others. I'm sure they will all be queuing up to file if they haven't done so already. Yes, Ethereum was not created by an anonymous group or person like Bitcoin. And yes, hedge funds and some legacy players such as traditional banks were or are heavily involved in the Ethereum network. Yes, Ethereum does not have a hard cap, which means it's forever inflationary. And by that, I'm also not dismissing the fact that it does become deflationary, especially under heavy use or under heavy load and traffic. But it is what Ethereum does that makes me think the spot ETFs will likely attract more legacy investors than Bitcoin. You got to hear me out. I've got a point to make here, and I think it's an important one. Ethereum is the leading smart contracts blockchain, which also translates to the most decentralized applications currently built on top of it. In other words, it's got a bigger ecosystem. It now pays out some kind of dividend through staking, and if you're coming from, say, investing in stocks that pay dividend, Ethereum will be more attractive for you than holding Bitcoin, because Bitcoin, you're just holding it there. And then if something else comes on that holds value better than Bitcoin, what happens next? There is also lending and borrowing on the Ethereum network through various decentralized applications, and most importantly, the majority of leading stablecoins in Tether and USDC reside on the Ethereum network. Again, that's value. Stablecoins are used to transfer value from one state to the other. By state, I mean it could be from fiat to crypto. You use stablecoins, you need that as a medium of exchange, which is stable. Almost every other decent new generation layer 1 is connected or is attempting to connect the Ethereum network in one form or another, thereby adding more value to the Ethereum network. And no, that argument of the first mover advantage, I think it's strong right here. And by combining dividend payments with businesses creating additional value, I think most legacy investors will likely want to invest into a technology model that generates additional value whilst also appreciating in value. So think of your holding, say, Tesla stocks. You're holding them so that they increase in value while the company is creating more value, but you don't have any ownership of that value yourself. Now, flip it on its rear and go to the Ethereum network. You hold Ethereum, it increases in value, but you're also getting a dividend in the form of staking. Now, think about that. The dividend, it's a percentage at a certain rate, and this is also an appreciating asset that you're holding over time. Of course, it will be affected by the cyclical nature of markets, but this is something that people should be considering. Would you like to hold something that depends on someone buying that asset off you by paying more, or something that is actually adding value without you doing anything? Businesses, of course, that are built on top of Ethereum doing what they do, but they're also creating additional value to the Ethereum network. I'm using Ethereum here, but it could be any layer 1 that is designed in the same way. Anyway, guys, that is my thoughts. I think once the Ethereum ETF comes on, Bitcoin is going to fight on its hand. I'm not just saying this because this is the latest thing that people can sink their teeth in and start screaming about. You see, holding Ethereum to BTC means the investor is not relying on someone else paying more for the digital asset they hold for that asset to increase in value. Bitcoin can only win this battle if the Bitcoin community welcomes DeFi, the Bitcoin network. Without that, there is only one winner in my view. The Ethereum spot ETF will trounce the much awaited spot Bitcoin ETF once both are alive, of course. But Bitcoin is probably going to gain that first move advantage, but I don't see that lasting. As soon as the Ethereum spot ETF comes up, I think it will have more legs. And Ethereum will also have to move fast on that front. Why? Because these players who are applying for these spot ETFs will be applying for spot ETFs for the likes of Polkadot, Cardano, Cosmos, Solana, and so forth. So it's worth making the hay while the sun shines for some of these networks. How they do that, I have no idea, but they have to take advantage of that. Anyway, guys, those were my thoughts as far as the Ethereum spot ETF is concerned, the rumor around it, that is, and what I think will happen once both this Ethereum spot ETF is running and the Bitcoin spot ETF is also up and running. If they run at the same time, I can see the Ethereum spot ETF trouncing the Bitcoin ETF in terms of the value that is attracted to each of those networks. But for the wider ecosystem, everything got to be good for the whole ecosystem, whether it's Bitcoin or Ethereum or another chain. Any spot ETF to this ecosystem is welcomed by everybody, or it should be welcomed by everybody. It doesn't matter who it's coming from, because we know there is always going to be market redistribution when that happens. Anyway, guys, what are your thoughts? Let me know in the comment section. I know it was a long one, but it was a time for me to share my thoughts as far as this subject of ETF is concerned, be it Bitcoin or Ethereum. Let me know your thoughts in the comment section. Until the next video, I'm your host, FD465.tv, signing out for now. Bye.